need to know to triage the market. It doesn't say to know, by the way. I just misrepresented the graphic there. It's the levels you need to triage the market. The levels you need. Pivot model, standard deviation model, and value range from market profile analyses. That's available at marketvitals.io every day. Matt, happy post 4th of July to you.
Yeah.
The 5th. We got the 5th going. And the market rallied last night and the 4th euphoria, and then sort of got schmeezed here. Now,
well, it got schmeezed, for the 4th. It sold off hard from, when we turned to the 5th. But from the open, we're up. So there you go.
Hey, Matt, hold on. Again, a little wrong. Come on. Corey DeAngelis shared this latest national data on growth in administrative staff, principals, teachers, and students in public schools. I know this to be a fact from Dave Collum too, that this is the same thing at universities.
For sure. And hospitals. Right.
And hospitals too, for sure. And it's an upside down world because.
Well, it's and this is what is, this has really been the common theme for me for years, like big government, big schools, big hospitals are all one and the same. And they can't keep going like this. They
can't. I mean, what is the added value? And I wanted to blow it up so you could really see it.
Yeah.
I'll stay behind here, but 88% increase in administrative staff.
Yep.
A 37% increase in principals and assistant principals. So let's just say it's a 37% increase in assistant principals, because they all had a principal to begin with.
Yeah.
Students and teachers, that actually makes sense.
This is I've said this for years. Like, socialism in this country has been and is in the process of failing. People say, "What are you talking about?" Like, we're not. We've been entirely socialist with the big government. I mean, whatever you want to call it, you can call it whatever you want, but it's big. And
what is the added value of all those positions? Like, have our math tests gone up? I mean, it's more.
Well, especially since you don't even need to take SATs and ACTs.
Well, let's.
In college anymore. So, like,
to be clear, though, our academic output has not increased like that. We don't have kids that are 88% smarter. And this was in full evidence yesterday in Bend, Oregon, as the hooligans were out in full force.
Oh my gosh. By the way, I walked the pet parade for the first time. I was a participant versus watcher.
Did Rudy do it?
Yeah, Rudy did it. It was great. But it was I've never seen that many people in a parade in a big city. There were so many tourists. The streets were lined from Harmon, where they started, all the way up Newport, right? We walked up Newport from Harmon. We started in the park, staged there, all the dogs. I saw like 100 burners, by the way. The Bernese mountain dogs are everywhere. It's crazy. I mean, I literally saw.
We're hardly even a mountain town.
I mean, I couldn't believe how many I saw. The Swiss mountain dogs. I saw the burners. I saw the mix. The multiple mixes. The one guy's got a burner poodle, huge, named Guinness. He was huge. But anyways, the crowds were huge and just having a great time. Freedom rang, by the way, and I saw 2 masks. I couldn't believe it, but I saw 2. That's it.
It's over.
It's over.
Hey, Matt, this is not over. The World Economic Forum's Great Narrative Conference, the Great Narrative Conference, elites trusting each other more and more. We've picked this as the top of elite trust back in January when this was tweeted out at the Great Narrative Conference. And just to bear evidence to this, one of the great narrative networks, CNN, and one of the great narratives that they pushed were the January 6th hearings, the oh my God hearings, June 13th through the 19th. Nobody watched, Matt. Again, down 13% from its May averages. I saw Bill Maher a monologue a week ago, and he tried to do some January 6th jokes
Yeah.
and ripping on Trump, and he got zero response from his ultra liberal audience.
Right.
And the reason why is because none of them watched either. Like, his joke was referring to the hearings that none of them watched, and he actually had to say, "People, nobody watched this. You're my audience, and nobody watched it." It was very revealing, and then him trying to backtrack and make light of it by saying, there was this guy, his name was Trump, he was the president, and like he's going to give that, educate his audience. I don't know. There is price discovery here, though, because CNN is owned by a publicly traded company. Matt, bring it up.
Yeah, it's owned by Warner Brothers Discovery now, and you want to talk about like a leading indicator, right? This peaked out at last March of 21, 78 and a quarter, and since then, which strangely enough is not even 2 months after Resident Zoo was placed in his residency. And so 78 all the way down to 1392, down another 2.5% today. Bob, this is ugly. It's a $34 billion dying market cap that nobody watches. Maybe you're forced to watch it, I guess, in the airport terminals. So that's about the only place that still runs the reels, right?
It's unreal. I mean, at what point is there insolvency here for Warner Brothers Discovery?
I mean, they're not selling many ads, is what I see right there. It's pretty ugly, Bob.
That is just unreal.
I don't know.
Unreal price. And it shows up. Like, if you put content on that nobody watches, you can't sell advertising.
And if you look at the weekly chart, it could literally go back down to $8, which is another half off from here.
Half off is the theme. I think that's our theme.
But this was the spike that we had from COVID, right? The COVID pump, when people were forced to come home and watch TV, watch the reel. But then people got sick of the reel. They're sick of the narratives. They're sick of the bullshit. They're sick of the fakeness. And I think, like, I don't know, just the whole holiday weekend, I felt that, like, people are so darn sick of, coming back to your starting, the big government, big schools, big education.
And big, it's not only that it's just a narrative, it's we're going to tell you how you're going to live. And by the way, hamburgers aren't going on the grill anymore.
Right.
And how about the pushback in the Netherlands? The Dutch, who would have thought it would be the Dutch?
Right. The liberalist of liberals.
The Dutch, the farmers just shutting down. I mean, the videos are incredible.
Yeah.
The amount of tractors on highways just in park. And now they're getting tear gassed because there's a major meltdown on this narrative.
Yeah.
And the bugs aren't going to be on the grill in our lifetime, because this thing completely falls apart.
Oh yeah. The whole, and the whole green movement is getting crushed too.
Matt, speaking of elites and elites trusting each other, this was Jeff Bezos. Ouch, inflation is far too important of a problem for the White House to keep making statements like this. It's either straight ahead misdirection or a deep misunderstanding of basic market dynamics. I don't know which one is worse. I mean, either one of those choices is catastrophic moving forward. And
it's interesting coming from the guy. It's also ironic, interesting coming from the guy who owns the editorial board and the paper, Washington Post, who has done nothing but, try to vilify and crush the Trump, name, family, anything associated with them. Right. That's all they've done for the last 6 years. So it's interesting. That is interesting that, he's raised, obviously, and given a lot of money to the Democratic Party. So for him to say that, and again, all the smart ass comments over the weekend again. Oh yeah, there is, talking about Biden, just lower your prices. You're gouging people. Like, does he not understand how?
Well, he's never run a business, Matt. So
right.
No, he understands.
But again, this is what's got to change to get rid of the big government, the big hospitals, the big pharma, the big schools. This stuff has to break down. And unfortunately, they're not going without a fight. And the narratives are now out there in your face. They're not even trying to sell them in the back channels anymore, and it's failing. And it will continue, and it will, unfortunately, will continue to fail. And I have a feeling it'll bring the country down a notch, even with the loss, right?
Well, bring up Amazon, because he for sure is impacted by high oil prices. I mean, the Amazon delivery trucks aren't running on propane, and even if they were, they're not running on hydrogen. You know what I saw recently was a Tesla repair truck, and it's not a Tesla.
Yeah, I saw that too.
I thought that was awesome.
It's like a Ford. Yeah,
right.
Because they don't make them.
All right, Amazon fully right-sided here, and if
and again, don't forget this split 2 for 1 or 20 for 1. So it used to be, what was it, almost $4,000, wasn't it? 25 to 1 or something. I don't remember where it split from, but it's not pretty. It's not a pretty chart, and the high was 189, so it's been halved. It got down. It held 100 the first time, but again, on the longer term chart, fully right-sided, as you said, will definitely be a battle here between 70 and 100. That's the next level, right? So there's levels, and to me, it could rally to 140, but probably will stall there. And to the downside, 100 held the first time, but next time we'll trade down to 70, and then we'll battle, 70 to 100 for a while. That's the way I kind of see this playing out. I don't see that getting any better for it. I don't see a quick turnaround in this, recessionary, depressionary environment that we've just entered. By the way, we just entered. There's still no pain. Like you can't get away with no pain. It doesn't work that way.
No, for sure. Hey, Matt, speaking of Amazon, I'm going to share here. I'm going to share when I can share. I can't share right now. A couple of things here that we're going to flow into. We got a great share of a Marty Armstrong article that's going to explain a lot around the disconnect between what's going on in oil today, and again, what you've been touting for months and months, if not years, a couple of years now, is that dollar index. But first, Amazon. Look, man, I went to a barbecue yesterday, and I brought 4 pounds of jumbo shrimp on skewers with the shrimp mojo on it. We're down to only 1 left in stock because people were ripping their phone out and becoming dealers, buying pounds of shrimp mojo at a time. Anyway, I just wanted to bring that up.
Good stuff.
But anyway, this was Marty Armstrong, Will the Fed Reverse Course? And he's talking about how capital flows are way more important than the seemingly disconnect that you see. If oil is off 10%, how can the dollar index be up 1.5%? Right? Those two things don't seem like they should coincide. But what you have, and this is a great map showing massive global capital flows, and mostly, as you can see there, out of Europe and into the U.S. I can't believe Australia is actually getting flows, but there's got to be the Indonesian countries are losing.
Yeah, the mining space and everything. They're heavy energy place to put investment. So, which is ironic. Yeah. Ironic,
right? But this is the bigger story that Marty is talking about. That in times
it always is, and this is it. It's the evergreen of capital, right? It doesn't stop quickly. These guys all run together. They all and so. And since everybody has been short the dollar, and we all know the dollar's doomed, but not yet.
Not yet. And this is the dollar index, and this is a quarterly chart, Matt. We just rolled the quarter.
Yep.
I just want to point out the potential right now on the quarterly, 109, let's call it 40.
Right.
109.40. And when I brought this up, when I took your money, it was this monthly chart, which is now got, this is the monthly chart, room to 110. Last month, as you recall, I was saying 107.
Yep.
And when you look at this is just an explosive chart. That's all there is to it.
Well, and now that
it's
taken out that level that we were paused at, the 105.90, right? Because we had to get there. Now that we've taken that out, again, you're going to go. You have a $16 bracket. We talked about this before. So that breakout sends it really, in my opinion, I think we're going to trade up to 120 at least.
Plenty of time and room.
Yep. And when was the last time we were at 120, Bob?
Hold on a second. I have that information. It was right back here in 2001, A Space Odyssey. Actually, you didn't even get there then. That high. Oh yeah,
Yeah,
120.
it did. It got to 120.
Yeah, 121.
It was basically the top. That was the top of the market, also the top of the equity market. Kind of when that was peaking. So similarly, I think we're gonna continue to see markets go down too. Equities go down, dollar goes up, inflation continue. Oil, again, why don't you bring up that chart, because it's down here to 102s. I'd like to, get your momentum read on that right now too, because I think it's getting interesting. And then I'll take a peek at both of them when you're done.
Hold on. I got to make sure I get the continuation chart of it.
Mhm.
There we go.
Oh, it's not now below 100. There you go.
Yeah. And this is the monthly. We just started the month. It's cracked the momentum level.
Mhm.
This is the area I'm looking at as a great buying opportunity. And obviously you can stay short now, and it can't just take out the month's high that it's already put in.
75 bucks.
Yeah, but 75 is that momentum level, the opposite momentum level. One of the great trades, if you're patient in momentum modeling, is to buy, go in direction of the slope when there's a retracement.
Yep.
Why don't you bring it up, and then we'll go on to some housing information. We have information on housing.
Yeah.
Crude and DXY, both of them, man. I need your expertise from a market profile.
Well, the crude is completely fallen out of bed here now that 102. And remember, we talked about it. Like when it cracks, it cracks. And when 102, we knew it wouldn't hold the second time. And I said and so that happened, and now it's down here to 98 bucks, fallen out of bed. Definitely struggling, the whole sector. Matter of fact, I was just looking at this before we came on, and you see, Conoco's down 8%. These are, widely held names. Exxon down 5%, Chevron down 5%, Occidental down 5%. These things are getting on sale quite a bit here, but I don't think there's necessarily any hurry, because it just broke that level. Matter of fact, I would just wait for it to finally find a bottom, and that might be that $75 level, Bob, to me. I mean, it really, this is an ugly chart. Look at all the red here, except now Google's gone green, Amazon's green, Microsoft and Apple barely green today, but it's been an interesting course today. And then as far as the dollar, again, once this 105 broke to the upside, again, I'm going to bring up a longer term chart just so you can see it, but it finally broke, and I think we're going to go test this 2000 level, because we haven't. We have not tested this in so long, Bob, that I think we're finally going to get it done and take out a lot of people on a stretcher. That's going to happen. It's not going to be pretty. Now that we've broken out, and again, when you look at this, we entered this bracket in 2014. So this is 8 years in the making.
That's so important.
Like, that's not. So
we
you
don't
have
even
all
need Kamala Harris to tell us how important time is.
Time is something that
the passage of time. It's incredibly important in a market dynamic.
Yes, time. But seriously, time is important factor. I always say time over price. Time is really important, I think, when things start to change and crest, and that's what we're seeing right now. Yeah, it's overvalued. You all can argue all day, all you want, that the dollar is overvalued and it's going to zero. But Marty Armstrong's story tells it differently. Capital is still coming here. There's nowhere left for it to go, really. There's some in China, there's some in Russia, but not at the scale that's happening in the U.S. still.
Right on.
So you can't fight that. And where is that going? That's going into treasuries, right? That's going into interest rate products. And, the bonds are up big today. I don't know, again, very strange. Like the bonds are trading like they're going to cut rates.
Yes.
Like,
yes, they are.
And again, so what happens at the end of the month when they raise again? Like this is a dangerous game. And again, I think I'll start right here with the long-term chart, that this is, got all the way down to 131, and it could rally again. We've talked about it. It could rally up here to 145, 148 and still be bearish. So it's short-term wise, they're taking people out on a stretcher right now, Bob, because this thing is literally going parabolic. And I'll just show you on the short term. But look at this move over the weekend. 138 yesterday, all the way up here again to 141, hit a new high. It hasn't pushed off yet. And equities still are red for the day. So there's no correlation going on here. Where's that money going, Bob? Right now, it seems to be chasing bonds.
Hey, Matt, what do you think about too on this, where I think sometimes, especially when markets, I think sometimes you can over analyze correlations, and that it's a complete disservice to trading what's in front of you.
Yeah, exactly.
You got to be cognizant of that.
Just because the dollar's up doesn't, or the bonds are up, and typically stocks follow along. They're up today, but not in the sense that this is up. I mean, this is up 2%. They're up from the open, I should say. They're actually red, right? The indices are red still for the day. Like the NASDAQ got green barely, and now it's red again. The SPOOs have been red all day, haven't even got close to green. So that's a great point. Just because correlations are supposed to be, or have been, or likely are, doesn't mean they always are. And you need to know that as a trader. Like you said, trade what's in front of you. This is a very bullish chart, and we've been talking about it for some time. Now it might be nearing being done, but who knows? I mean,
when you fractal out and you say, 148 is not out of the realm of possibilities. It's
right.
Like,
cognizant
of the levels.
Yeah, and then this 143 level is huge. We've talked about that, so that's the next level it's got to get through, and I don't see that happening. Like I said, I think these areas should hold, but we're not far from those levels. So why wouldn't we get up here to 143, 144 maybe, before pausing, before you're going to run into some more serious selling? But it sure does look bullish to me still. But again, maybe the Fed meeting on the 26th at the end of this month puts an end to that. I don't know. Maybe they will raise. I don't know what they're going to do though.
Well, here's a little graphic shared by Nick earlier, and you had somebody else share a similar graphic, Matt. And this is a home price to earnings ratio. So the average earnings, by the home price. And in the 07 housing bubble in Phoenix, it was right around 8.1. And right now we're at 8.5.
Yeah.
I mean, the bubble is very apparent in Phoenix.
Yeah.
And they went from 2014 to 2020 right about 5x, but after the 2007 crisis, it went all the way down to 3.3x. I'll tell you what happens here too, and I've seen some other charts on inventory through the roof.
Yeah.
And as buyers can become patient for the most part, right?
Patient,
yeah. When they
should be. And
not only they should be, but they usually you have an opportunity. Well, I'm going to rent for 6 months.
Right.
I'm going to rent for a year. This thing looks like it's topped.
Yep.
And and Marty points out in that article, it's not short sellers, it's the no bid problem with collapses and bursts.
Yes.
It's just the no bid. Everybody is like this.
Yep. Everybody's staring at each other going, no bid. Exactly.
No bid. And when there's no bid, that's when the panic sets in, and then the offers become exponentially lower and lower and lower until you find somebody that's going to take their hands out of their armpits. And that's what's happening here. It seems to me clear as day.
And again, it happens slowly. Talking to some realtor friends who give me updates daily, we're seeing not only, as you said, inventory skyrocketing. Everybody's acting like, and again, we're at peak season to sell too right now. Like 4th of July is it. Like if you're not buying this month, you're done. Right. So this is the last month. And then we're going to go cold here. And I'm just talking locally, and then it's going to stay cold next summer, right? That's where you're going to start to see it. So, and we are always like a year behind in our local market because that money has left. Again, it's capital flows. That money has left the larger markets, whether it's San Francisco, Portland, Seattle. It's all coming here, but at some point it dries out, right? And there's no more of those sellers because those people are done. So the point is that already happened basically a year ago in San Francisco. You're seeing it. The prices are dropping huge in the big city. So that's leading indicator. Same with L, it's happening in LA, even though people are denying it. Plausible deniability is what it is.
There is so much plausible deniability around narratives. It's shocking. It's shocking.
So,
all right, man, that's what we got. That's what I got. Anything else that's jumping at you that you want to discuss from a pricing discovery standpoint?
No, I think it's an interesting time for sure. And I think it's going to continue to be a great trading market. Again, if you have oil down 10%, there's opportunities, right?
Absolutely.
There's opportunities, and great. I mean, we want to see it down. I mean, again, you get oil back to $2, I'll tell you the recession's over, but I don't see that happening, right? I don't see that happening yet. And we're still above prices, that oil was before the whole Ukraine, narrative started. Right?
Bingo. Matt, I'm rewatching the docudrama Chernobyl.
That was good.
It's a must watch for centralized planning. And sometimes it works, and then in crisis, it's not so good.
Again, when there's plausible deniability, nobody takes the blame, and the whole fails because of that, and that's why socialism ultimately crumbles every time. If there's no accountability, and you're all concerned about woke and pronouns,
if everybody gets a trophy, there's no ecosystem that works like that.
No,
it just doesn't. It just doesn't work.
And you're going to be a better guitar player than I ever would be. Shame on you. Shame on you. I mean, how does that make sense, right? How does that make sense? So the lack of common sense is slowly, I think, evaporating from our world, and people are not going to sit down and take the narratives that are fed to them all the time. Make critical thinking great again about it.
It's another tequila sunrise. All right, Matt, that's what we got.
All right, my man.
You have a great day.
Thanks.
Lee's a no-show. Put that down on his time card.
We'll dock his pay.
Right on. Have a good one.